Welcome to Crypto Invest 38. Today, we bring you an in-depth analysis of digital asset investments. Make sure to watch until the end to gather all the essential information needed to devise a suitable investment strategy. In recent years, digital assets have emerged as a promising alternative asset class, attracting the attention of investors worldwide. The report Investing in Digital Assets by KPMG China and Aspen Digital offers an insightful perspective on the views of family offices, FOs, and high net worth individuals, HNWIs, regarding this sector, particularly in the Hong Kong and Singapore markets. This report not only highlights the level of interest in investment options, but also sheds light on the barriers and challenges these investors face. The rise of digital assets and interest among FOs, HNWIs. Digital assets, beginning with Bitcoin in 2009, have rapidly evolved into a trillion-dollar industry. The emergence of other cryptocurrencies like Ethereum, alongside developments in decentralized finance, DeFi, and non-fungible tokens, NFTs, has created a dynamic and attractive investment ecosystem. According to the report, 92% of surveyed FOs and HNWIs are either already investing or planning to invest in digital assets. Key drivers of this interest include high return potential. Digital assets are perceived to have significant growth potential compared to traditional asset classes such as stocks and bonds. 64% of respondents cited this as their primary reason for investing. Portfolio diversification. Digital assets offer a new investment channel, helping to diversify portfolios and mitigate risks. Institutional participation. The increasing involvement of large institutions has bolstered confidence and trust among FOs and HNWIs. Portfolio allocation and preferred asset types. Despite their strong interest, FOs and HNWIs remain cautious in their capital allocation to digital assets. A majority, 60%, allocate less than 5% of their portfolios to this asset class, though more than half of the respondents plan to increase their allocation in the future. Among digital assets, cryptocurrencies dominate. Bitcoin and Ethereum are the most commonly held, with 100% of digital asset investors owning Bitcoin and 87% owning Ethereum. Additionally, there is growing interest in NFTs and DeFi. The report presents the ownership percentages as follows: Bitcoin 100%, Ethereum 87%, stablecoins 60%, NFTs Metaverse 60%, DeFi tokens 47%. Investment methods and influencing factors. FOs and HNWIs primarily invest in digital assets through the following channels. Cryptocurrency exchanges, the most popular channel offering convenience and robust customer service. Investors value security and user experience when choosing an exchange. Crypto-focused hedge funds. These funds provide a professional approach, enabling investors to access the market indirectly. Direct investments in digital asset service providers. FOs and HNWIs also explore investments in companies offering services related to digital assets, such as exchanges and software developers. When selecting service providers, investors consider the following factors: team and track record, the most critical factor, reflecting the provider's capabilities and experience. 68% of respondents emphasized the importance of the team, while 58% focused on track record. Industry reputation. The provider's credibility is a significant consideration. Business model and compliance. Investors also prioritize the provider's business model and regulatory adherence. Barriers and challenges in digital asset investments. While the potential is immense, FOs and HNWIs face notable concerns and barriers when investing in digital assets. Regulatory uncertainty. The lack of clear and consistent regulations across countries is the most significant concern, with 83% of respondents citing this as a challenge. Investors seek a transparent regulatory framework to protect their interests and foster market growth. Valuation difficulties. Digital asset valuation is challenging due to limited public information and the inadequacy of traditional valuation methods. 50% of respondents highlighted this as a major issue. High volatility. The highly volatile nature of digital asset markets raises concerns. To mitigate risks, investors employ market-neutral strategies and invest in stablecoins. Tax and financial reporting issues. Ambiguity surrounding tax regulations and financial reporting requirements also deters investors. 37% of respondents expressed concerns about taxes, and 25% were worried about financial reporting. Market fragmentation. The fragmented digital asset services market, with hundreds of centralized and decentralized exchanges, complicates decision making for investors. The report outlines the concerns as follows: regulatory clarity, 83%, high volatility, 50%, limited valuation methods, 50%, tax concerns, 37%, financial reporting concerns, 25%. Investing in digital asset service providers. In addition to direct digital asset investments, FOs and HNWIs show keen interest in investing in service providers within the sector. 58% of respondents have already invested in service providers, and 21% plan to do so in the future. Preferred areas include cryptocurrency exchanges, seen as critical gateways to the digital asset market. Software developers, companies developing blockchain based applications, are also attracting investors. Custody and data service providers. Custody services and data providers are highly valued. The most popular investment method is through direct equity stakes. Investors choose to invest in service providers for reasons such as portfolio diversification. Investing in service providers offers diversification beyond basic digital assets, 71%. Growth potential. Investors believe service providers will benefit from the ecosystem's growth, 64%. Token profits. Many service providers issue their own tokens, which investors expect to yield returns. The importance of regulation and tax issues. Regulatory attitudes toward digital assets play a pivotal role in the investment decisions of FOs and HNWIs. 72% of respondents consider this a critical factor. Regulators are gradually establishing specific frameworks to govern the market, such as licensing requirements for digital asset service providers in Hong Kong and Singapore. Tax clarity is another significant concern. 29% of respondents stated that unclear tax regulations reduce their willingness to invest in digital assets. Conversely, 54% indicated they would be more inclined to invest if tax incentives were available. The absence of specific tax regulations for cryptocurrencies in regions like Hong Kong has posed challenges for investors. The need for new valuation methods and financial reporting standards. Traditional valuation methods are unsuitable for digital assets. Investors require new valuation approaches based on the unique characteristics and data of this asset class. Current financial reporting standards also fail to meet investor needs. 75% of respondents believe that existing accounting methods do not provide adequate information for investment decisions. Conclusion. The Investing in Digital Assets report provides a comprehensive view of the perspectives and behaviors of FOs and HNWIs in digital asset investments. Despite challenges and barriers, the interest and potential of this sector are undeniable. To ensure sustainable market growth, regulators must establish clear legal frameworks. Service providers must enhance quality and security, and investors must equip themselves with the knowledge and skills to make informed decisions. With continuous technological advancements and increasing institutional participation, digital assets are poised to remain an integral part of FOs and HNWI's investment portfolios in the future. Thank you for watching until the end. If you found this video valuable, please like and subscribe to the channel for updates on new content. Once again, thank you, and we wish you success in your investments.